Overnight, you have the benchmark Nifty 50 that's trading very close to the high point of the day. Right now, up about 0.5% or thereabouts and moving, edging closer towards that 22,300 mark. The broader markets, in fact, looking even more sanguine, if anything. And you have the mid-cap index that's up about 0.8% or thereabouts. And you have the small-cap 250 index that's up over 1% right now. So, understandably, the market breadth tilted in favor of the advances. In terms of the key contributors on the Nifty 50, let's take a look at that list. You have Bharti Airtel at the top, followed by Larsen & Toubro and Tata Consultancy Services. Infosys up and about before the presentation of its Q4 results. On the other end of the spectrum, you have the biggest loser in the form of Nestle India, and some reports emerging over the course of the last couple of days that the company is in fact using added sugar in its Cerelac, which is widely consumed, and this is something that is only in developed nations, in a few developed nations, India included. In Europe and in the UK, there is no added sugar. There is some pressure on the stock on account of that. We will talk about that in just a bit. But for now, let's turn to ICICI Lombard, Smriti.
Right. Good morning, Alex.
Morning.
ICICI Lombard is the focus for today. The stock is up about 3.5%. And to break down numbers for us, we have my colleague Puneet joining in. Puneet, tell us about the performance of ICICI Lombard.
Yeah, thanks, Mathew. So the company had issued a steady gross domestic premium income growth in this quarter compared to last year, while the combined ratio have also seen a reduction for the better. Now, for the quarter four, the GDPI income grew at 22%, coming at roughly 6,070 crores versus 4,900 crores in this time last year, while the combined ratio has improved to roughly 102% from 104% previously. The solvency ratio has also done well, coming in at just 2.6 times versus roughly 2.5 times previously, while the PAT has grown at roughly 17% compared to previous year, coming in at 520 crores. Now, when we go to the product mix, we've seen a stable for each of the products. Like motor, they are at 19% versus 20% previously. Two key data points here within the products. They said that within motors, the third-party rate hike has not been announced for 2025, which augurs well for the demand for the particular product. While in the health and travel vertical, they said that the retail health agency grew roughly 22% compared to previous year, where it competes with the likes of Star Health in this segment. We've seen roughly fire as well as the other segments maintaining market share roughly, as well as the product revenue coming in at stable 14 to 15%, which is the still. Now, finally, what are the brokerages saying? HSBC has maintained their target price of roughly 1,990 rupees, which is a 20% upside from the current levels. They say that the firm has increased its market share gains and is focused in each of these segments going forward as well, lowering the loss ratio given forward. They say that they see that meeting FY25 operating ratio guidance should lead to even higher EPS growth from the current levels, while it says that the firm is firmly placed to deliver a faster premium growth compared with the industry. So ICICI Lombard doing very well on the results, and the stock is up roughly 3.5% today. Back to you.
Right. Thank you so much, Puneet, for that. And on that note, let me introduce you to the guests for today. We have Lancelot D Cunha, CIO, ValueX Wealth Connect, and Swati Hotkar, Senior Equity Technical Analyst Research at Nirmal Securities. Welcome to both of you, and thanks for taking the time out. I'll come to you, Mr. D Cunha, first on the focus, which is ICICI Lombard. We're seeing results are pretty much in line with what was expected. You're seeing brokerages giving it a target price of an upside of 18 to 20%. Are you also seeing that sort of gains in the longer term?
Yes, I am looking at seeing that kind of improvement in the financial performance drive the pricing up as well. Because if you look at from a macro situation, as the economy continues to grow, general insurance will also grow at 15 to 18% per annum. And since ICICI Lombard has been consistently maintaining its market share in most of the important segments like fire, motor, etc., which are the profitable segments, we will continue to see growth coming into this sector, and as well as growth for ICICI Lombard. Even the management has indicated that there could be a 15 to 17% growth in the premiums. And with the loss ratios looking better, I think this stock should do much better over the longer term.
Okay, fair enough. You know, we had initially thought of taking Nestle, but then when we discussed it, the stock was not reacting too much. And then after that, of course, let's pull up the chart and see where it's currently trading. It's down as much as 3.5 to 3.7% off the low point of the day. Lancelot, I do want to broach the topic with you because reports emerging that there is as much as 9% of added sugar in Cerelac in India and certain other markets. Now, it's hard to quantify the impact of this, but I can't see parents very comfortable with the idea of sugar in the food that they're giving their children. We were trying to look at the revenue contribution, and it's not very clear the breakup between baby food in the context of the overall milk products space. But do you think that there could be a sizable impact, and how would you react to this if you are an investor?
So if you actually analyze the business of Nestle, a large part of the business comes from the Maggi noodles and the ketchup part of their business. A significant portion of revenue also comes in from their milk product space, and Cerelac has been one of their mainstay products as far as the baby food is concerned. Now, while this news report, or the reports suggest that these are some inadequacies, we also need to understand that this stock always has been priced at a huge premium over other FMCG stocks. And we could see that with this kind of news, the premium can get shaved off a bit. As far as, unless we start to see some regulatory action coming in, saying that, okay, Nestle is now not allowed to sell this, or some action is being taken by, regulators in the space, that could have a much higher significant, let's say, a negative impact. As long as that doesn't happen, I think on a sales basis, you may not see too much of an impact because, in reality, people who are, this kind of news really doesn't impact sales directly, because a lot of people believe that, okay, the product of the company is good and, they would go by the brand, that it's a global brand, they will give us good products, etc. But any regulatory action in terms of asking them to stop production or sales in this could mean a significant downfall from these levels as well.
All right. So regulatory action is what we're going to watch out for in this specific counter, because that's the key factor that may avoid the stock here. But let's start with the queries now. The first one is from Himanta, and this one is on ICICI Prudential. They say they bought the shares at a price of 619 rupees. So I think this is a short-term question, so I'm going to come to you on this one. It's slightly higher than what the current price is. What do you have a target for the shorter term in this particular counter?
Yes, as of now, the view is definitely a positive. Stock is trading in the pattern of the high top share bottom formation. Also, the interesting fact as of now, it is well placed above the short term moving average, that is 20-day moving average, which is also a positive indication. But
okay, we unfortunately, just while Swati was giving out her advice on that particular stock, I've lost her feed. We'll get her back shortly. In the meanwhile, let me take the next question. We'll revisit ICICI Pru, but the next question is from Mohit, and he's writing in from Ludhiana. He's asking about IDFC First Bank, which he has bought at levels of 26.94, and those are attractive levels if you actually think about it, because the stock is currently trading above the 80 rupee mark. Okay, so I'm told we have Swati back. Swati, you were talking about ICICI Pru. What's the advice here?
Yes, Alex, the overall view on this particular counter is really positive, because I was explaining on the technical front that the stock is trading in the pattern of a high top side bottom formation. Also, the interesting fact that it is well placed about the short-term moving average, say the 20 DMA. And as we have seen a very good amount of a rally from almost 500 to 640 levels within a very short span of time, say within a span for 2 months. So profit booking cannot be denied at the higher levels. I will suggest to hold on the counter as long as it's maintained 600 support levels. Once it manages to give the breakdown of 600 levels, then only we can witness some sort of a profit booking. So those who are having any long positions, they can hold on upside and looking for immediate target of 640, then 660 levels on the high side. But keep your long positions by maintaining a stop loss of 600 levels.
Okay. We've got a couple of questions, and I had already taken the first one, but I will repeat it. Mohit from Ludhiana is asking about IDFC First, which he's bought at levels of 26.94, attractive levels. His horizon is about 2 years. And we've got Sri Kishore Sharma from Motihari in Bihar, who's bought at levels of 61.62. And his time frame is as much as 3 years. He's wondering, both of these individuals wondering what the prospects are. Lancelot, what do you make of it? It's currently trading above the 80 mark. What's the potential for upside from here?
So I think the potential remains strong, Alex, because, this bank has been focusing on the retail liability side as well as retail asset side. And, its strength has been in that space. And we've seen them, expand a lot in the retail liability side by opening more branches, collecting deposits. So they've seen a fairly good deposit growth. NPS have been fairly low. So given that, this space is continuously growing, you are going to see significant growth opportunities for the bank, and that should result in much higher valuation. So I would say that if one is willing to hold on to this stock for the next 2 years to 2 to 3 years, you would get above average returns on this counter.
All right. Next counter we're talking about is Piramal Enterprises. Now this question is coming in from Rajesh. They say they want to know the fundamental view on this particular stock. Mr. D Cunha, we saw the stock getting affected by the AIF rules that came out a couple of months ago, but we've seen recovery from that. But fundamentally, how do you see the stock in the longer term?
So I think over a longer period of time, yes, the stock should, give investors good returns. But they've made a large amount of investment in, in the pharma space and in spaces which will be impacted with these AIF rules. If at the moment, I believe RBI is also looking at this the rules in a little bit more sympathetic manner. But probably over a period of time, these rules will get tightened and they will have some impact. So from a long-term perspective, yes, there could be growth opportunities, but there are also various other opportunities in the space which could give you fairly good returns, and one can look at those as well, where you're seeing more clarity on the upside.
Fair point. Orient Cement is the next counter that we're focusing in on, and Namita has got this question. She's specifically looking for a 3 to 6 month view and a technical view at that. Swati, what's the view on the charts?
My view on this particular counter is a little bit cautious, Alex, because why I'm saying that from the month of the January itself, we are witnessing a good selling pressure from almost 290 to now the stock is trading at almost 200 levels. And more downside can be seen into this particular counter because we are witnessing a very strong resistance at 220 to 225 levels. As long as it doesn't give the breakout of the same levels, we are not likely to witness a positive momentum on the higher side. So I will suggest to book the profits or to exit the long positions whenever we get a rise towards to 220 to 225 levels. As of now, 198, 197 is acting as a crucial support level. If it breaks that previous swings low, more selling pressure is likely to be intensified and which might take a stock back towards to 180 levels. So my view is a bit cautious. Try to exit the positions on every rise.
All right, so the next question is on the counter Yes Bank. This is from Anil. They say this is a good time to invest in the stock. Now, the stock hasn't been doing too much in the last couple of days, but has given about 46% returns in the last 1 year. Do you see some kind of an upside in the shorter term on this counter?
This counter has not performed really very well on the technical front from almost from last 4 years. The stock was trading within this range of 15 to 20 levels. Now it has came out of that particular range, but we are not witnessing a very much price momentum in this particular counter. So those who have an extra capital and longer time horizon in hand, then only one can invest in this particular stocks. Because I believe this counter is likely to witness a very slow rally on the higher side. Upside, as of now, the stock may rise towards 230 to 34 levels, whereas on downside, it has a strong support levels at around 20. So those who are interested for a slow momentum counters, one can invest. But my personal opinion to stay away from the Yes Bank rather than in this particular counter, one can go for into the SBI, Federal Bank or the Bank of Baroda. These are the good banking stocks one can invest.
All right. Yeah, I mean, incidentally, his time horizon is as many as 2 years. But in any case, I think that view holds true. We have to slip into a very quick break. We've got more questions that we will take, so do stay tuned. Welcome back. You're watching Ask Profit, and we're in the midst of taking all of your questions. The next one we're taking is on IRFC, which is a question coming from Arvind, who's writing in from Andhra Pradesh. He's bought at levels of 148. The stock is currently trading very close to that mark. He's got a long-term view on the stock, so he's wondering whether to keep holding or to sell at this juncture. Lancelot, what's the view on this particular stock?
So if you look at it from a long-term perspective, yes, railway financing is going to see significant growth, especially given the outlay that has been envisaged. Over the next 5 years, the government is looking at putting in close to 5 lakh crores of investment in this space, and that should, encourage, or see the need for railway financing, and hence the company should do better. But when you look at it, ultimately, it is also financing only a single sector. So obviously, whenever there is a little bit of a downturn or, things are not moving or interest rates move higher, you can see some portion of negative impact. So I think given that the stock is already trading at a significant premium to its long-term, price to book values, I think the upside from here will take a little longer period before you start seeing significant returns going forward. And so one should look at other alternatives rather than staying with this company for the long term.
All right. Next counter we're talking about is Engineers India. This is from Ravi from Hyderabad. They bought the stock at 160 a piece and it's currently trading at 215. Swati, we've seen the stock zoom in the last 1 month itself. Do you see more upside to this particular counter, or should you maybe take some profits off the table?
The view is positive. The stock in the formation of the inverse head and shoulder pattern. As of now, it is forming the right shoulder of the inverse head and shoulder pattern. We have seen that the stock has taken a very good support of 200 levels. And on high side, it has a breakout of a neckline breakout, which comes to at around 235. I believe that this pattern is likely to be continued, and on the in the near future, it can give the breakout of the 235, and upside we can see the target of at least 260 to 280 levels on the high side. So for the shorter term duration, I will suggest to hold on as long as it maintains the support of 200 levels for immediate target of 260 to 280 levels.
All right. This is a bit of a broad question, but Lancelot, this one's for you. You've got Jitendra Goyal, very young viewer tuning in, 22 years old, and he's got 50 lakhs that he wants to invest into the equity markets. And he's clarified, he said that this is for the long term, at least a few years. But he's worried that in the next few months, there could be a significant amount of volatility on account of the central elections, which is just around the corner right now. And he's wondering, in the event of a market crash, what should he do? So should he hold off till the dust settles to deploy the funds? What do you think? And how should he go about making that first few investments?
Right. Thank you, Alex. I think this is a question that, most investors are being faced with. But I think one should look at it a little bit, in a perspective that how much do elections really affect markets over a longer period of time. If your outlook for investment is like, say, 3 years, 4 years, elections really haven't impacted markets dramatically to reduce the earnings growth that you're seeing. Whichever government comes, at the end of the day, everybody is pro growth and pro economy, and that's where you are seeing the positive side of it. On the other hand, the market has already factored in that there is a positive, trend that this current government is going to continue, and that is factored into the market at this point in time. So, if there's any sign that that is unlikely to happen, then you might see a knee-jerk reaction where there could be a considerable sell-off in that kind of scenario because of the uncertainty created out of the election results. So as an investment strategy, I think it's better to put in at least 40 to 50% of your investment upfront, or maybe even higher. Maybe you can go up to 60, 70% of your investment upfront in good stocks which have a long-term outlook, and keep the balance 30 to 40% for the any volatility that may come out post-election results, because it could be, even depending on who gets appointed as a finance minister, etc., you could see maybe some volatility in certain counters, and then you can take advantage of that volatility and deploy the balance portion at that time.
Right, very interesting point of view, Alex. From what I'm hearing, that election is now a non-event for the big investors, but definitely retail investors may get affected more than that. But the next counter that we're talking about is ICICI Industries. This one's from Saurabh, and they bought the stock at 48 rupees. It's currently trading at 64 rupees. A bit of a profit here Lancelot. And the time horizon here is 3 to 4 years. Now, considering the fact that he's already sitting on a bit of a profit, do you suggest holding on to the stock?
Yes, Smriti, I think that if you look at the company is doing well and its profits are growing. The sector in which it is in is also growing. And if you look at the return ratios, the return on equity is a good above 17%. And so given that the long-term outlook is positive, one should remain invested, because in the short term, you might look at booking profit. There's also potential that you may miss out in the longer-term rally. So I think one can stay invested in ICICI Industries even at these levels.
View on ICICI. It's unchanged as things stand right now. The next question is coming from Sagar, and he points out that he's currently in the UAE. He's asking about Mazgon Docks, and I'm actually curious about this as well. He's bought 100 shares at a purchase price of 205, and he's asking whether he should book profits at this juncture. The stock is currently at 2198.65. I'm not even sure about the purchase price. But Swati, this is a stock that over the last 10 days has run up quite significantly. What are you seeing on the charts, and what should the investor do?
Yes, definitely, Alex. The stock has given a very spectacular rally in the 2023. Almost the whole year was the good year for this particular counter. As of now, the counter is trading nearby its 2200 levels. the overall setup is still positive on the technical front. Downside, it has a very good support of 2100 levels. If person needs the cash, then he can book at least partial profits at the current market price, or else they can hold the long positions as long as this particular counter holds the 2020 is the very crucial support level for this counter. If it's break that level, then the short-term trend will turn into on the negative side. So I will suggest to hold on by keeping a profit stop loss of 2020, and upside, I believe if it manages to give a breakout of 2250, upside door gets opens for 2400 level. So it's a hold from my end by maintaining a keep profit stop loss.
Coming back to you, Swati, on this one, because it's time sensitive. Hemant is asking this question. He's gone short on ABB at 6340 intraday. What should his strategy be?
Oh, on an intraday basis, he has took a short positions, but this counter has shown us a reversal from its 20 days moving average. From almost, he has shorted at a day's low. I will suggest to exit the short positions because the pullback rally is likely to be continued towards at least upside 65.90, and above that levels we can witness 66.50 levels also. So I will suggest to else maintain the strict stop loss of 65.50 for short positions, and any coming this particular any dips comes towards at least 64.50. He can exit the long positions. The overall trend looks positive, and we are witnessing a pullback rally on an intraday basis. So I would suggest to exit on every dips.
All right. Unfortunately, now we're completely out of time on this edition of Ask Profit. Thank you so much, Swati and Mr. D Cunha, for joining us and for answering so many questions for us. And viewers, thanks for tuning in on Ask Profit. And if we were not able to take your questions today, we'll definitely try and take them tomorrow. But don't go anywhere. We have lots more lined up for you on NDTV Profit.